Good morning, everyone.
Morning.
Good morning.
We're here with special guest Rebecca Richardson, also known as the Mortgage Mentor. Thank you for joining us. Thank you for being here today. We're really excited that you can be here to share some helpful tips with some of our followers.
Absolutely. Let's talk all things mortgages, just exactly what somebody wants to talk first thing in the morning.
First thing in the morning, everybody get your coffee. I'm just kidding.
Get ready.
Oh, man.
Well, Rebecca,
I'm sure you're just as busy as we are, Rebecca. It has been a crazy couple of months. It really has.
Yes, it has been. I mean, it's crazy couple months, and for us in the mortgage world, I mean, it really started to get insane last spring in the midst of all things COVID aside, just as far as an industry with refinancing and all kinds of things that were going on, behind the scenes on the secondary market and all that kind of stuff has made things definitely not business as usual, but we persevere. That's what we do, right? We're realtors and lenders. We're like Swiss Army knives. Like, what do you need? I can figure it out. Just give me a chance.
Right.
I know. And our team especially loves working with you. You do an incredible job for all of our clients. You really do.
Thank you. I appreciate that.
Yeah, of course. Well, I think, Jennifer and I were talking earlier just about how hard it could be to be a buyer right now and how it's so helpful to have a lender on your side. And I know I work with a lot, I'm only buyer specialist. So buyers are like what I live and breathe. I wondered if you could talk real quick about, why it's so important to have that conversation with a lender or as early on in the process as possible.
Yes. And I think that's one of the best points is, and I recently just did a video about this because it kind of clicked for me, particularly for a lot of first-time home buyers. They haven't been through this process before, right? And so the closest thing that you can equate to it is buying a car. And a lot of times you find the car, and then once you're committed to, okay, this is what I want, this is a reasonable price, then that's when you get into financing. And that's not how it can work buying a home, not even in a normal market, and especially not now, because the earlier in the process that we can talk finances, that we can come up with a plan. And I just tell people it gives you a longer runway. So if there's something you need to do from the standpoint on your credit, or maybe it's down payment related, or just to help refine that search and really kind of let those numbers sort of settle in, make sure they're going to be good for your budget. The earlier we start, then the more time we have to make all those changes. And it's not as in the moment and reactive. It also gives us time to take somebody from being pre-qualified, and that's basically where we're basing loan details off of what somebody tells us and what we see on the credit report, to pre-approval. And pre-approval is where we're actually getting that supporting documentation, pay stubs, bank statements, all of that. And ideally, then that gets reviewed by an underwriter. The person ultimately says yes. And it's as close as you can be to essentially having that loan sit there waiting for you to find the house. And all of those steps and preparations can help a buyer's offer stand out as stronger, because ultimately the seller's concern is this loan going to actually close? Like, if this is if this is the horse that I'm placing my winning bet on, basically, does that mean that we're going to get to the finish line first?
I have a quick question for you about pre-approval. I've heard people say my client is pre-underwritten. Is that the same thing as a pre-approval?
I think that's a great question, because there's some semantics there, and then there's also people will, even in the industry, will blend those words, right? So sometimes people will say, okay, I've looked over your application and I've run what's called automated underwriting, you're pre-approved. By true definition, pre-approval means that documentation has been received and ideally, like I said, reviewed by an underwriter. So pre-underwritten, pre-approval, the further we can get that client's loan details down the line as far as review and documentation, the better it is. So sometimes pre-approval just means that as a loan officer, I've reviewed the pay stubs and everything looks good, but a pre-underwritten, it's kind of like getting a home pre-inspected. There still may be things that come up minor, but about any kind of major issues really before there's money on the line.
Got it. And as far as when you're saying get started early, like how early are you thinking? What do most buyers like if they say I'm going to buy in at the end of the year, how far in advance should they be talking to you?
I have conversations with people now, honestly. So it really depends on how in depth they want to go. I'm always happy to give general answers to somebody. You know, this is what our minimum score is, or this is what this program's down payment is. This is how you can buy when you need to sell, those kind of things. In order to give specific answers, ultimately we need an application, and that does mean a credit pull, and that is a hard inquiry on credit. I think it's a good thing that people are smart about not having too many inquiries, but I think there sometimes is an overemphasis placed on that inquiry versus what you get in exchange for it, as far as, you know, an actual pre-qualification, pre-approval, kind of whatever stage you're in. So sometimes people, even if, let's say we're here talking in May and they want to buy, you know, fourth quarter, some of them will go ahead and do an application just as if they're going to buy now. And essentially I can say, yep, everything's in line, or yes, everything looks good. And then take these steps over the next couple months. If somebody doesn't want to do that step, then pre-qualifications, depending on the loan type, last anywhere from 90 to 120 days. So that 2 to 3 month mark out from when they want to buy, at a minimum, I think is a good strategy. Because again, if there is something that needs to happen, particularly on the credit or things like that, we have enough time that we can take some of those steps before, you know, y'all are telling them, okay, we're out there, we're in the market, and if you see something that you love, we've got to move on it. It just helps to kind of take down some of that stress by just allowing a little bit more time.
Yeah, that's good information. I think a lot of people just think, oh, I'm going to buy a house. Let's get started now and start looking at houses today. And that makes it a little bit crazy when you're trying to do that.
Yeah.
Especially in this market.
There is that emotional factor to it, right? I mean, it's kind of the, okay, we're doing this, and once you start to visualize that this is, you know, the next step that you're taking, you want it to happen right then. But like you're saying, it does add an extra layer of craziness to an already somewhat chaotic market. So as much as we can, by starting early, it helps to avoid some of that.
Absolutely.
Definitely. And it's good for every buyer to know their budget too. You wouldn't want someone to go fall in love with a $1 million house when it just doesn't fit into their lifestyle.
It does. And it's, you know, I have to frequently have the conversation around, you know, what you know that you can afford based off of your cash flow, right? Because I think buyers are more educated about the process, and calculators are available and all these kind of things. And I think that that's wonderful. So people say, okay, I think I can afford this. I have no doubt that that's your cash flow and all of that is fine. But depending sometimes on how income works, or if somebody has, you know, somebody is self-employed or has a side business or things like that, those income calculations that we have to use might be different than what their cash flow is. And so to your point, you know, being able to make sure that we've got an actionable budget, then again, leads to a more positive process, because they're looking in the right, you know, that kind of that right band of sales price. It's not too high, it's not too low, it's Goldilocks, it's just right.
Yeah, I think that's a great point, because I have a lot of people that would say, you know, oh, I'm qualified for this amount, but it doesn't mean they want to spend that. So talking about what their monthly budget is, because maybe they travel a lot, or they have sports tickets that they buy and things like that, that all has to be counted into what you're paying, so you're not house poor.
Yeah. And that's sometimes the conversation is, it's, you know, what payment are you comfortable with? Because again, people know their budget. To your point, how do you spend your money? You know, the goal is not to blow out everybody's budget. So it's, what are you comfortable spending? What is your max? Because depending on, again, this market, we need to know. And then also to understand, okay, about every $10,000 swing in sales price and loan amount is about $50 a month. That's the personal aspect of personal finance. Is this home worth an extra 50, 100, whatever it is a month? Because this is what the market is giving us. This is the perfect home. It's a personal decision. Then is that something that you'd want to move forward with?
Exactly.
Yeah.
Well, Rebecca, another question for you. I'm just curious, what is one question you get every single time you get a new client? Is there one question most frequently asked that almost every client repetitively, asks you? It's a hard one.
Um, we've covered some of them, like how long does a pre-approval last? What's the difference between pre-qualification, pre-approval? I try to tell people that kind of the three phases of a loan: pre-qualification is kind of like dating, pre-approval is being engaged, and then loan approval is being married.
Oh, I like that.
Yeah. And then, and I was talking with another lender, and he said, "Oh, I explain it like it's being like on first base, second base, and then like on third base, and you got like a really great hitter." I'm like, I don't play baseball, so I use my analogy. You use your analogy, whatever works. So I think it's that, and then also, again, I understand and respect that people are protecting their credit because plenty of people have worked really hard. Again, kind of coming back to that, more educated buyer than ever, to have good credit, but understand it, really to give good, solid answers, we need a full application. That does mean a credit pull. That is not going to take you from a 780 to a 650. It's just not. It's a few points. Right. The trade-off is you get actionable answers. And it's kind of like if you went to your doctor and said, I think something's going on, but don't do any blood work. Right. It's just kind of part of the entrance to the game.
And with that, with the credit pull, what I get a lot is, they might say, well, yes, we'll call, the people that you recommend, but we're also gonna go online and do this. So is there any consequence to having, 4 or 5 pre-approvals, or like how much of a ding is that?
Very great point. So that is how mortgage inquiries work differently than if you're getting like a store card or even going kind of, again, back to most people's experience first buying a car. Is different than that. So mortgage inquiries get coded together as a single pull. The CFPB, Consumer Financial Protection Bureau, says that it's within 45 days. The people that I know that work within the credit space, they say 2 weeks. So I think it's more because if you're looking at sort of that 45-day window, there's underlying information that's going to change on your credit report. Accounts are going to report with a longer history. A credit card balance might go up, it might go down, so you're going to get variance. But typically somewhere in that 2 to 4 week window, if you have inquiries from multiple lenders, you're going to be hit with the one hard hit, and then you will see the other inquiries on your report, but it's not going to ding you as a hard hit every time if it's done within a contained period.
Yeah.
Okay.
Good
info. And I know I get this question a lot from buyers, but they're, they all, almost the first thing out of their mouths are the rates still low? Are the rates still as low as they were? So could you speak a little bit about interest rates today?
Sure. So interest rates are still near historic lows. And we saw kind of as we came into 2021, they started to go, kind of crest over 3%. Oh my gosh, over 3% interest rates. But when when you've been seeing in the mid 2s, the high 2s, 3s, do seem concerning, especially as we're seeing sales prices increase. Mm-hmm. That stabilized a little bit. That being said, they are not going to be long forever. 30-year rates are still in the low 3s, high 2s, depending on loan program and all the different details like credit score and things like that. So still very, very affordable. Certainly don't expect a runaway train, because really kind of the shortened version is mortgage rates are very much tied to the bond market. When the economy is not doing well, the bond market tends to do better. So as the bond market is strong, that lowers interest rates. That will flip as the economy starts to improve, and we'll start to see rates move back up.
Okay.
I'm wondering, is
We're
there
digesting
any sort of,
that?
I know, I am too. I'm thinking.
It's like if you look at it, it's like an inverted chart. It's like a Top Gun. Like I was inverted. So that's kind of how rates work compared to the bond market.
Yeah. So you don't predict anything crazy happening. There would be some fluctuation possibly.
I would say as long as I have been in lending, as much as I pay attention to the market, there are people that is their entire job. So I'll defer to what they say. And so, for example, NBA Mortgage Bankers Association, they are not predicting that rates are going to, I think, certainly not go over 4. I mean, could we be in the mid 3s towards the end of the year, depending on how the economy does? Sure. But it's not skyrocketing by any stretch.
Mm-hmm.
And remind us again, if somebody was quoted 3 and then it goes up to 3.5, how does that affect a payment, say on like a $300,000 house? I'm really
Oh,
throwing the math at you
God.
now.
As much as I'm a mortgage savant, I can't do that math in my head.
Okay.
But
There
I
are
will say,
calculators and special things that you use for
yes,
that. Yeah.
yes, there are. Yes, there are. I am in my baby LO days, I did used to have to manually calculate payments in my car, and I do not remember those factors anymore.
Yeah.
I had to crowd it out for other things like Instagram algorithms and that kind of stuff. I will say that 3 to 3.5 feels and sounds very significant. It does. It is not the end of the world. For most people, because again, most people I think are, um, you know, conservative is not exactly the right word, but I think reasonable about their budget. 3 to 3.5 is not going to kick them out of being able to purchase a home. And there's always there's always the option to refinance later. So when we do rates top like that, it's not great. It's disruptive. It interrupts people's expectations, and I understand and respect all that. I would not let rising interest rates deter somebody from buying a house, because they're bigger things at play than having a payment at 2,000 versus 2,150. Because again,
So
that's probably not
that
going to break the budget.
Yeah, the refinancing that made me think of something because we have a lot of past clients that are always calling and saying, rates are so low, should we refinance? Like, what makes sense for someone to refinance? Like, what gap between what they locked in at years ago
Mhm.
versus what they could lock in now?
So I'll say that a old kind of mortgage myth was, don't even look at refinancing unless you're dropping 1% in your rate. That really isn't valid anymore, because first of all, we and a lot of lenders, I mean, we're not charging exorbitant closing costs. So you don't have to have that much of a drop to justify, the closing costs that are associated with the refi. Typical 3 reasons for why people will refinance. Yes, for a lower rate, for a shorter term, moving from a 30-year to a 15-year, something like that, or taking cash out, because especially with all the great equity that we have, some people may say, you know what, at the end of the day, I really do love where I live, but after all of us being home for a year, I do want to do a pool, or maybe I want to do outdoor space or whatever. And I'd like to tap into my equity in my home, take some cash out and invest it back in my home, or pay off other debts, or whatever the case may be. So from that standpoint, when somebody is looking at refinancing, that's part of what our job is to not just tell them what their payment would be, but also, based off of when your loan started and what your rate was, what your balance is now. If you refinance, you think that you're going to live there for another 7 years. If at that 7-year point, are you going to owe less on the mortgage? So, is there a benefit of maybe continuing making the same payment, but just make the mortgage more efficient with a lower rate? All of that comes into effective mortgage planning versus just kind of cranking out a payment because you're at 4 and you can be at 2.875. That's easy. That any calculator can do that, but actually giving advice as far as how to effectively manage and leverage that debt, that's a whole different conversation.
I love that. And that really goes back to having a good relationship with your lender, that it's the big picture, not just what's my rate, what are my payments,
Right.
but what's
Right.
your long-term plan. That's
Exactly.
amazing. Yeah, I love that.
Yeah, for sure.
Well, I don't know about you, Jennifer, but I've taken a whole thing of notes. It's just good to jog your memory, because this is so helpful for our clients when they ask us. So this has been great for me, because it jogs, what I know, but it's helpful to hear Rebecca explain it. So thank you.
Yeah.
For sure. I do love what I do. I mean, it's, I'm pretty positive that no little girl grows up wanting to be a mortgage lender. I don't think that was even an option presented by my high school counselor. So it is definitely something that I fell into, but I mean, I've been doing it for years and years, and I love it for that reason, because it is like one big Rubik's Cube. It is an opportunity to help somebody, really harness kind of the power of, compounding interest, of amortization, of all of that kind of stuff. And it's super nerdy, and I get that, but it is exciting when you think about helping somebody build wealth through real estate. And that's ultimately what it comes down to.
Yeah.
Well, I have to say something that's not super nerdy is all of these amazing videos that you post. You are like
Oh, thank you.
TikTok queen. And so Lisa and I were talking about that earlier. We're like, we have to give her a shout out for all of these
Yes.
videos you do because they're fun and they're so informative. So where can people
Thank you.
follow you to see all of these amazing videos?
For sure. So on TikTok and Instagram, I'm the.mortgage.mentor. So the mortgage mentor, but it's broken up. So the.mortgage mentor. Primarily that's where I put most of my stuff. Certainly on Facebook, even on Pinterest now, because apparently that's a thing.
Oh.
But that's my newest challenge. I do have longer videos on YouTube, and I can be found there as Rebecca Richardson, the mortgage mentor. I try to do these short videos because it can be a pretty complex and heavy topic. I mean, you get into what mortgage insurance strategy do you have? And like, I get it. Like, unless you're in the moment, it's not going to be interesting to you. But I want to give little bite-sized pieces of information so people can kind of use those as bricks to build a foundation of knowledge. So then they do feel empowered and not like they're just kind of fumbling along in the process, because we're talking about some serious money. So that's why I do. That's why I do it in that way is one, it's not meant to be scary. I know it can be intimidating, but I'm not intimidating. And I don't want people to be scared of it. And I want people to feel confident in the choices that they're making.
Mm-hmm.
Yeah.
Yeah. Well, they're very,
That's
very
awesome.
helpful. I really, and I've sent them to a lot of, I've sent the videos to a lot of clients to help explain something, and they
Sure.
love it. They love it. They really do.
Well, it's I keep coming back to it's very much that feeling of I don't know what I don't know, but I know what I want, right?
Mm-hmm.
So it's and people don't ever want to feel like they're asking a stupid question, and so sometimes they don't. So they don't ask the question at all. So try to anticipate the questions that are commonly asked. Go ahead and just address it. Try to put that content out there so people understand there are a lot of different aspects, but ultimately you can understand it. You can understand what an escrow account is. You can understand when it's a good time to refinance or how to structure the mortgage insurance for a loan and why that can be a good way to leverage money and not have it feel like it has to be kind of this huge, university course that you have to take. It's just meant to be kind of like Khan Academy, like little snippets that you just use to kind of build on each other.
That's great.
It is, definitely.
Yep.
Well, yeah, I was going to say, Jennifer and I have started this new thing where we love to end these videos with talking about something you're grateful for. I think it's just good to, good in the whole mess of Thursday of a busy week, just to sit back and talk about why you're so grateful for, what we do and the life you have. So if anyone, Jennifer, do you want to start and give us what you're grateful for this week?
Sure. So I was thinking about it, and it's kind of ironic because it's Teacher Appreciation Week.
Mm-hmm.
I'm just grateful for all the people we get to help. And as I was thinking about the people that we have helped, we've helped over 5 teachers buy and sell in just the last month. And to me, that's amazing. I mean, I was a teacher to start. So to continue those relationships and be able to help those that I love and that used to do the profession that I loved too. So I'm grateful for our teachers, and I'm grateful for the relationships that we have and the people that we're able to help.
Yeah. Gosh, I can't imagine being a teacher in this day and age. So we owe so much to them. We really do. Yeah. Rebecca, what are you grateful for?
I was going to say that's a hard act to follow. Yeah, I mean, I feel like what I'm grateful for right now is, this market is unlike anything that I've seen. I mean, like anything that we've seen. I am thankful for, really strong partners like y'all, who understand that it's meant to be, it's about relationship. It's not about a transaction. So it's with everything going on with, turn times for appraisals and title and just trying to get somebody under contract in the first place. And, managing those emotions and those expectations to still keep the joy and the excitement in it versus it just kind of being, a daily grind. So I'm very thankful for the relationships that I have that understand we are truly a team and we're doing this together for the benefit of what this person's vision is versus it, kind of being, I don't know, trying to work independently and kind of point fingers at each other.
Yeah. That's great. Well, my grateful kind of piggybacks off that because we were able to help one of Jennifer's past clients, her daughter, is under contract on a condo in Elizabeth, and it is the prettiest, gorgeous I mean, it is gorgeous. I feel like again in this market being so crazy, when your buyer does get that win, it feels incredible. It really does. We were there yesterday, and her parents brought swatches for pillow samples and couch. And it was, I mean, I just started. I mean, I started tearing up because she's, with buyers, you look for a little bit, and then you finally find the one that gives you that emotion, and it's something that, that's why I love what I do. I really do. And it was amazing to watch her eyes kind of light up looking through this condo. So I know she's going to be really happy, and it kind of makes all of the stress worth it,
It does. It's that kind of, getting to experience that with them vicariously is just, it's kind of like chicken soup for the soul, sort of like, it's like,
exactly.
I love this. That's amazing.
Yes. I love that expression, chicken soup for the soul.
Oh, that's an oldie but goodie book, Lise. We need to get you a copy of that.
I know. I like that expression. I'm going to start using it.
But it is. It's I think after the year that we've all had in varying degrees and experiences, it's nice to have those. It's nice to have those moments where you can really kind of have that joy, and it just be about joy without calculated risk associated or whatever the case may be. And I think that's just it's good to see that again.
Yes, definitely is. It is. Well, I know
we are so happy to have you here, and just we're lucky to have you as a partner with us. You do such an amazing job with our clients. And Lise, are we going to share Rebecca's information when we post the video? Is that best way to find her? Okay.
Yes, we definitely will. So in addition to us sharing it, if anyone needs her info, please let us know. And then, of course, go look up Mortgage Mentor on everything, TikTok, Pinterest, every outlet of social media.
I appreciate it. Thanks for letting me spend some time with y'all.
Absolutely. Have a great day.
Yeah.
Thanks.
Oh, yeah. Happy anniversary.
Thank you. I appreciate that.
All right. Have a great day, everybody.
Thanks.
Bye.
Bye.